I wish to take this opportunity to thank you all for joining us for the launch of the electronic rental tax system, a transformative solution designed to simplify tax compliance for property managers and owners across the country. As part of KRA's broader digital transformation under the Enterprise Integration and API Management Initiative, our commitment was to make it easier for taxpayers to meet their obligations while improving the overall compliance experience. The electronic rental income tax system, eRITS, has been developed to simplify tax compliance from a technology perspective for the monthly rental income regime. The eAPI initiative anchors our roadmap towards Tax Administration 3.0, where technology and governance unite for improved service delivery, operational efficiency, and stronger collaboration with stakeholders. We continue to experience sporadic year-on-year growth in terms of revenue collection. In the last financial year, 2023-2024, the monthly rental income registered a collection of 14.4 billion, translating to a 5.2% year-on-year growth compared to a collection of 13.6 billion and 12.3 billion in the previous financial years, 2022-2023 and 2021-2022, respectively. eRITS is therefore designed to enable seamless integration with the KRA's ecosystem for purposes of tax computation, filing, and payment, and is accessible through the Gava Connect API portal for system-to-system integration and as a service through the eCitizen platform. The intention is to augment voluntary compliance within the sector while reducing administrative burdens associated with taxation. This initial phase will focus on driving awareness among key audiences, with other phases focused on technical enhancements, including data analytics, geospatial mapping, and a comprehensive education and adoption campaign. To the eRITS project team, I urge you to continue engaging with the relevant stakeholders and to incorporate their feedback into future enhancements and modules of the system. In closing, let me reiterate that eRITS is a voluntary compliance tool reflecting KRA's commitment to service excellence, efficiency, and continuous improvement. With this launch, we are taking a bold step towards a future where tax compliance is not a burden, but a shared responsibility for nation building.
As we navigate an increasingly complex global economy, it is imperative that we create a business climate that is not only competitive, but also equitable. It is indeed true that the growth and sustainability of a nation's economy depends on its ability to mobilize enough tax revenues. In this endeavor, deployment of innovative solutions to support our taxpayers become critical to enhance taxpayer experience and compliance. The government remains steadfast to ensure our country is well managed, public services are delivered efficiently, and we expand our fiscal space. Our journey forward is definitely demanding. We are tasked with guiding our nation towards self-reliance amid rising expenditures and debt obligations. To achieve this, we must adopt a multifaceted approach, which includes expanding our tax base, exploring new revenue streams, and optimizing revenue from every sector of our economy. Despite reducing the rental tax from 10% to 7.5% to encourage compliance, the government has only been collecting 17 billion annually from rental income tax, whereas estimates suggest that the potential revenue is at least 100 billion Kenya shillings. So we are actually collecting only 17% of the potential. That is quite low, which is why we welcome this initiative for us to be able to move to that target. Ladies and gentlemen, it is important to note that in spite of the past efforts to enhance revenue collection, Kenya's tax revenue yield is still below the EAC tax revenue target of 25% of GDP. It is this in mind that we have been reviewing the tax policy landscape to improve efficiency in tax administration, identification of revenue loopholes, and enhance tax compliance. The government has developed two important policy documents, namely the national tax policy, and the medium-term revenue strategy. The national tax policy, for example, provides clear guidelines governing tax administration and ensuring predictable tax system in Kenya. Through this policy, Kenya will be able to develop a progressive tax system that enhances revenue mobilization, promotes investment, and fosters a flexible fiscal space. On the other hand, the medium-term revenue strategy provides a framework for guiding tax administration to improve efficiency in the administration of tax laws, close loopholes for tax evasion, and enhance voluntary tax compliance. I'm therefore proud that today we unveil the electronic rental tax information system, dubbed eRITS, in line with the above two policy documents. This launch marks a significant milestone in our commitment to ensuring a fair and efficient tax system that will contribute to the development of our great nation. The eRITS will enable the registration of landlords and rental properties in a streamlined and comprehensive manner, simplify tax filing processes for landlords, making compliance easier. This will in turn enhance voluntary tax compliance. With this system, we aim not only to increase revenue collection, but also create a more equitable and predictable tax environment that benefits both taxpayers and the government. Ladies and gentlemen, to the landlords across the country, I urge you to embrace eRITS and comply with the rental income tax regulations. This is not just about revenue collection. It is about nation building. The taxes we collect will support key sectors such as healthcare, education, infrastructure, and security, improving the quality of life for all Kenyans. For National Treasury, we are really keen to work together with all stakeholders to ensure that our economy does very well. With those very many remarks, let me now declare the electronic rental income tax system officially launched.
It is my pleasure to join you this morning as we begin a new chapter in enhancing compliance with the real estate sector through unveiling of the electronic rental tax system. We call it eRITS. Technology provides tax administration with tools to analyze taxpayers' data, identify trends, detect tax gaps, and ensure that tax systems are fair and efficient. Monthly rental income was introduced in 2016. It is for taxpayers between 288,000 up to 15 million. That is the area that MRA covers, but over a period of time, we have not been able to get a full potential of this. The rate of tax is 7.5%. It was 10%. It has now been reduced down to 7.5%. But we've not been able to get the full potential. The government has committed itself, and that's why you can see the rate was reduced to a lower rate. Ladies and gentlemen, to address the gap and enhance compliance in this sector, KRA has adopted a more advanced digital transformation strategy. The new eRITS, which we are going to be launched today, system is being unveiled today with integrated, which will be integrating with the existing rental management solution to simplify the system, to create a very easy and end-to-end solution to make it easy for compliance. By expanding the tax base and ensuring an equitable distribution, we can reduce the burden on current compliance taxpayers. The introduction of eRITS, therefore, makes a significant milestone. It is imperative that we continue adopting systems that are supporting every eligible taxpayer to fulfill their obligations voluntarily. I urge all the landlords to register their properties and file returns promptly. And while we encourage voluntary compliance, let me reiterate that paying rental income tax is not only a legal obligation, but a contribution towards building a better and stronger Kenya to all.
This particular event is a very momentous event in our country. As we speak today, we are witnessing an additional of 200,000 homeowners every year in Kenya. Towards the end of this month, the president will be handing over 1,000 keys for Mukuru. In the next 2 months, we'll be handing over 5,000 keys across the country, which is there. And amongst these 200,000 owners, 30% of them will most likely be for rentals. So it's a very, very special moment for us to be having a software portal which then enables the citizens to participate in this national undertaking. But much more significant, and I think that will be the last point in the PS remarks, this portal we are launching today, this system we are launching today, does something else which is very, very important. For the tenants who are contributing, who are paying rents, the tool allows the tenants their payment records to be used as part of the criteria towards allocating them for new homes. Ladies and gentlemen, one of the long-standing challenges in our housing sector has been low compliance with rental income tax obligations. Many property owners and landlords have faced complex tax filing processes, inconsistent data on rental properties, and limited access to tax support services. Indeed, our State Department is the one that houses the Rent Tribunal. So we see very many of these cases. The State Department for Housing and Urban Development has been championing digital transformation in housing and land management to ensure efficient service delivery, improved urban planning, and better coordination between public and private stakeholders. We recognize that introduction of eRITS is complementary to our ongoing efforts, particularly in the affordable housing program, where transparency in rental and property ownership records is essential. With property registration now linked to geolocation verification, eRITS will complement our data integrity efforts and enable us to make more informed decisions on urban planning, housing projects, and future administrative policies.